So somebody sent me a DM on X today and it really like gave me flashbacks of when I was getting started out investing like a decade ago. And the DM went like this. Hey Brandon, what's going on? Hope you're having a good day. I'm down like 500 bucks in the stock market today. I only have like $1,000 account. I'm stressing. I'm down 500 bucks. What do I do? And I took myself back in time and I was like, God, I used to be like this where the market would go down 500 bucks. I would be like, crap, I just worked in my day job for free that day. And then a day that the market went up 500 bucks, I was like, oh yeah, great. I just made my day job income for free. And I'm just thinking back in time and it's like, dude, like I was there. I know what you feel like and I know what it feels like to not really understand what's going on in the stock market and how the emotional aspect of investing is what really wipes most people out. Because everybody wants to make money every single day in the stock market. You want to see green, green, green every single day. But as an investor, that is not realistic. You are not going to see green every single day in your portfolio. And I was thinking super hard about my reply before I did it. And I didn't just want to be like, oh, yeah, go do my course, go do my Discord. It's free, whatever it may be. I didn't want to seem too like salesy with him. So this is what I said. I said, look, I was in your shoes before. I know exactly what it feels like to put money in the market. The day you put it in, you see red the next day and you're like, crap, screw the stock market. It's not for me. It's never going to work. The stock market's rigged. I don't know what I'm doing, whatever it may be. So if you're like me and you've ever lost money in the stock market before, I think that you're going to get a lot of value from this video. So let's just have a little talk. My investing philosophy is this. You build your base portfolio, you buy companies when they're trading below intrinsic value, when they're cheap, when they have pricing power, when they have a moat, when they have a durable competitive advantage. I know that might sound like a lot right now, but it really just comes down to this. Buy a good company at a great price, and it's all good. Just be patient and hold on to the company. Because if we just break down, like, what is the meaning of investing? Like, what is the definition of investing right now? Investing is you put your money in something right now with the hopes that maybe a few years down the road, you're going to make a lot of money doing that. You put in $100 into something, and maybe 5 years down the road, it'll be 200 bucks. That is the whole point of investing. But in the meantime, in the 5 year period that you're holding that stock or that ETF, whatever you buy, there's going to be a lot of volatility. It's not going to be straight up. It's not going to be straight down. It's just a journey of going from A to B on this path of the stock chart going up. But there's going to be a lot of bad things that happen along the way. There's going to be inflation. There's going to be interest rates. There's going to be a recession. There's going to be company pulling guidance. There's going to be whatever there's going on. There's going to be bad news headlines that the typical emotional investor just doesn't really understand what to do with that information. So they're like hyper focused on every single little daily movement in their stock, but it doesn't really correlate to what the actual company is actually doing. Like, think about this real quick. If the company of Apple, for example, let's just say that Apple stock falls 10% today, but then tomorrow it goes up 10%. Did the true value of Apple, all the iPhones that they sell, all the Macs that they sell, all the iPads that they sell, all the stuff that they're doing with the service business, which is huge for Apple right now, did the actual value of Apple fluctuate by 20% in a 24-hour period? The answer is 100% no. So it's like when you understand that, people shouldn't see volatility, which is that stock price going up and down a lot. You shouldn't see volatility as risk. You shouldn't see volatility as, oh my God, I need to do something. I need to react to this. What you need to see volatility as is opportunity, because there's a good analogy that Warren Buffett's mentor, whose name is Ben Graham, he talked about the stock market as this arbitrary character called Mr. Market. And Mr. Market is basically just like this emotional, crazy person that knocks on your front door every single day. And Mr. Market says, hey, Apple stock, 150 bucks. Do you want to buy it? Yes, no. But then the next day, he's like, Apple stock, 120. Do you want to buy it? Yes, no. And every single day, when the market is open, Mr. Market is offering you stocks at a different price every single second because they move so much in price every single day. And some days he gives you a good price, some days he gives you a bad price. And most of the time, when you're trying to buy a company and you just want to hold it for the long term, most of the time, Mr. Market is going to give you a bad price. And what I mean by that is, most of the time, you're not going to have a good deal because being a good investor is about saying no to a lot of things. And I was thinking about this guy because we've been going back and forth in this DM. And I'm like, look, dude, like the value of your companies, they're not fluctuating by that much in a single day. So you should just see that as opportunity to capitalize. And what I was saying with Mr. Market is that most of the time, the prices that he's going to offer you are going to be crappy. He's going to be trying to charge you too much for something that's not giving you enough value. But there's definitely going to be some times where Mr. Market's going to offer you a good company at a good price. And it's going to be like everyone's freaking out in the streets. Jim Cramer's going to be on CNBC saying, oh my God. Tom Lee's going to be on CNBC saying, yeah, things are tough, but whatever, buy the dip, which, he's permeable Tom Lee. which I don't have anything against Tom Lee. I'm just saying that. But the vast majority of the people, they're going to be all over X, all over Instagram, all over YouTube saying, oh my God, things are bad. The dollar's going to collapse. The US economy is going to collapse. We're going to get nuked. China's going to take over the world. Whatever it's going to be all these doomsday situations. Because there's one thing about humans that doesn't change, and it's human nature. Humans get emotional. Humans get euphoric. Humans are humans. We're all emotional creatures. So when you understand the limitations and the flaws of a human, you're going to understand that whether you're a hedge fund guy, a financial advisor, a financial pro, a billionaire, and a millionaire, whatever you say you are, a new investor, a great investor, whatever, all investors get emotional from time to time. And when this guy sent me the DM and he said, hey, I'm down 500 bucks today, I was like, look, you're getting emotional. Like if we just look at my portfolio, my main Schwab account's like $1 million right now. When this April 8th dip happened just a few months ago, my account went down, just as much as the market, maybe even a little bit more because I had a little bit of option stuff in there. But now that I was patient and I capitalized on this dip when Mr. Market was freaking out, I'm now doing much better off right now versus what I was doing before because I capitalized on this dip. Yes, of course, I could have went, did more call options and sold more put options and bought more shares, but I capitalized when Mr. Market was freaking out. So when you're in this investing game long enough, Mr. Market will definitively 100% give you good opportunities, but it's not going to be there every day. It's not going to be there every month. There might be an entire year where there's just not a lot of opportunity out there. And I relate this to, I'm kind of like building on what I'm saying to this guy here. I was like, look, there's not always opportunity in the market. And for example, like right now in the time that we're in, the market is a little bit expensive. Yes, we might get interest rate cuts. Maybe that'll help the valuation of the market. Maybe Q2 earnings are going to be good. Maybe the guidance will be good. Maybe AI is going to keep exploding. Maybe it will, maybe it won't. But when you're not super confident in your companies that you're going to buy, your option plays that you're going to do, the best move is to simply just not do anything. Sit there and wait and be patient and strike when it makes sense to strike. I'm long. My entire portfolio is long and bullish right now, but I don't have a lot of option leverage right now. Maybe I'm going to be wrong and maybe I should leverage up, but maybe I'm going to be right. Either way, I'm positioned to win. Understand that the stock market's not going to go up every single year. There will be years in the next 40-year period, so 40-year time period, the stock market is 100% chance going to go down by 40% in a year from peak to trough. And people are like, there's no way that's going to happen, Brandon. And I'm like, look, it's going to happen. The market falls, the market goes up, the market goes down. In the long term, yes, the S&P and the Nasdaq and most companies go up. But in the short term, there is going to be volatility. There's going to be negative events that happen and the market's going to experience volatility. So, are you going to be the investor that panics? Are you going to be the investor that gets emotional? Or are you going to be the investor that has a level head and understands that the herd mentality, the herd investors, which is the vast majority of investors, and again, this applies to financial pros, financial experts, hedge fund guys, financial advisors, whatever you want to call them, they get emotional too, and they often underperform the S&P 500 also. So when it starts raining money out of the sky, are you going to take your hands and grab the money? Or are you going to be sitting on the sidelines panicking and freaking out? And I really want this video to like hit home with you guys because it's like this single video, if you watch it from start to finish, and I have a couple more things that I want to say before I wrap this up, this video will be the difference of millions and millions of dollars in your portfolio because picking a good company is one thing, buying it at a good price is another thing, making money with stock options is another thing, which, the strategy that I teach in my Discord and in my course, yes, it lays all that out and it's step by step. But the thing that is harder to teach is the emotional aspect of investing. I'm going to be completely honest with you because it's hard to just simply teach emotions, but the way that you control your emotions in the stock market is to educate yourself because the more that you know, the more confident you're going to be when things are tough because you're going to know how to capitalize. You're going to understand why the market's dipping, when to start buying, when to start selling, when it's expensive, when to start selling, when it's cheap, when to start buying, whatever it may be. But if you're just one of those guys that casually watch some videos on YouTube, maybe you read one book and maybe you just watch CNBC for Jim Cramer or whoever you watch on TV, whatever it may be, you're probably not going to succeed as an investor in the long term. Maybe you make a little bit of money, but I'm willing to bet that you're going to underperform the S&P 500 by a long shot. And just think about it, like the brainless thing is to buy VOO and chill, which is what everybody talks about online. But it's like, so why are you trying to do all these crazy plays that probably aren't making you even more money than the S&P 500 when you could just do that and forget about it and do like the brainless thing and then just go scale another part of your life. Go buy rental properties, go build your business, go work more time at your day job, go spend more time with your family, go on a vacation, do whatever you want to do. Like, don't give yourself a job by trying to find the next Fibonacci retracement that's the cup and handle that's going to explode. You're not going to make a lot of money doing that in the long term. Some people will, some people won't. And I'm not bashing technical analysis. I'm just saying that whatever you're doing right now, if you're not beating the S&P 500, you are 100% wasting your time. Just buy the S&P and forget about it. But you can beat the S&P if you really know what you're doing, and a lot of people do beat the S&P in the long term. You have to have a strategy, you have to have discipline, and you simply just have to know what to do. And whether you do my course in my Discord or you do somebody else's or you read books or whatever you want to do, get as much information as you can. Ask the same question to 20 different people and get 20 different answers and see, how they answer it versus how I answer it versus whoever answers it. And take that information and jumble it up and get your best answer based on what everybody said. And then you now have a sample of 20 people or whatever it is, and you now have more confidence in that decision. But, if you just listen to Jim Cramer, for example, he's just an easy guy to pick on because everybody picks on him. And, you know, he's so popular, but he's so bad because just Google the inverse Kramer index. And basically, inverse Kramer means whatever Kramer says, do the opposite. And it outperforms what Jim Cramer says to do. So, you know, that just shows you that popularity does not mean making money. And I realize these YouTube videos that I make, you know, what do I get? 1,000 views, maybe 20,000 on some of them. These videos don't go viral, but the people that stick around and watch these videos till the end, I'm going to start making more raw videos like this. And I want to just help you guys and share my journey along the way, share how I scaled to a couple $1,000,000 and the why behind it, because I'm not just going to sit here and say, oh my god, buy these hot stocks because they're just guaranteed to moon. Like, that's not what it's about. You're not going to make money in the long run doing that. I know some of my videos, like the one before this one, it was about 3 companies that I do think are going to do very, very well. But again, like me making that video, that's not enough information for you to really make an informed decision on those companies. It's just my companies that I like. I gave you a little bit of a why behind it, but it's not enough for you to make a logical decision based on that. You got to do a lot more research than that. So I'm going to wrap this video up. I didn't want to drag it out too long. Again, if you want to do my course in Discord for free, the link is below. But if you want to watch that video, the one that I put out before this, one of those 3 companies, I'm super bullish on those companies. I think they're going to do very, very well in the long term. Short term, it is going to be very bumpy, but check it out. Video is going to be up here, and I'll see you guys later.